Future homeowners, are you getting ready to buy your first home with a VA loan? If so, you've come to the right place. Today, we're covering the critical steps to take before applying for a VA home loan to ensure the process is smooth and as stress free as possible. Whether you're a veteran or a military spouse, being prepared is key. So let's dive into these steps to becoming a homeowner. So the first and most critical step I would say is checking your VA home loan eligibility. So before you even dive into the process, it's critical to confirm that you're eligible to use the VA loan. There's two parts to VA loans: eligibility, do you meet the time and service and character of discharge? And qualification, do you meet the credit collateral capacity to be able to make those payments and get that VA home loan? Now, a lot of the reason I mentioned check your certificate of eligibility, because there are times that we come across veterans that thought they can use the VA home loan and they were not eligible. This is also going to be applied towards surviving spouses. So, in order to obtain your certificate of eligibility, you could do one of two things. You can go to va.gov and request it yourself, or you can reach out to me in the description below and I can help you pull that certificate of eligibility. Now, some of the basic service requirements are typically going to be served at least 90 consecutive days during wartime, 181 days during peacetime, and if you've been discharged from the military, at least a minimum of 2 years on active duty, 24 months. And if you served in the Guard, they're typically looking at 6 years of drills, so you have enough points in order to be able to use the VA loan, and then also surviving spouses of veterans who died from a service connection disability or died while on active duty. But there's so many caveats to the programs themselves that even the VA says, like, don't disqualify yourself, submit the documentation so they can take a look at it and let you know what you can do. Especially with like National Guard members, because they came out with some updates to it. So technically now you could do Title 32 orders depending on how much time you served and the type of orders. As long as they weren't training, you're able then to qualify for a VA loan, and it's also retroactive. So a lot of moving pieces to the program and eligibility requirement itself. So if you're having a hard time, please feel free. Reach out to me. I'm happy to do it. We do it all the time. I want to be able to get you down that path to know what you can and can't do. Now, when it comes to lenders getting this for you, I would say that's a big red flag. If a lender's telling you, oh, you have to pull it yourself and send it to me, that is a red flag. Like, we do it ourselves. We pull it to make sure that you can leverage the benefit. Because if you can't use the VA loan or they don't help you with it, other loan products are just not as competitive, at least in my eyes, when it comes to having no down payment, no private mortgage insurance, and having competitive interest rates. Another two thing we're going to talk about is understanding and reviewing your credit score and your overall financial health, because that's by far going to be one, eligibility, right? Hey, time and service and character of discharge. And then it's going to be qualification, understanding what your financial picture looks like. And look, I can't tell you, I could, if I looked at your whole financial picture, be like, hey, this is kind of where you might be comfortable, but nobody can tell you how much you should be paying. You got to figure out what you're comfortable with, right? Going to a lender and them telling you qualify for more than what you're comfortable with is a very positive thing. It means you're financially strong. If you come and say, I want to spend $2,000, but you only qualified for $1,500, that's not a good sign, right? Because that means that you think you're able to afford more, but the VA or the lender is basically saying like, hey, we're going to have to cut that down in order to make that work, right? So with that financial health piece is understanding your tax returns on top of all of this, okay? So let's just break down a couple things first, and then we'll kind of break into that. So credit score, which we do a lot of videos around, the higher your credit score, the better terms you get, right? Lower interest rates, everything becomes a lot more favorable to you because the lender's looking at that as being less risk. Another piece when it comes to understanding what your finances look like is looking at your debt to income ratio. Now, caveat, VA loans look at residual income. That's like a whole separate video. But the VA basically sets an amount, and it's pretty low, to be honest with you, of your net income you need to make in order to qualify and use your VA loan. So DTIs really exist for active duty individuals, or if you might have blemished credit, then they'll get reduced, but they primarily look at residual income. Regardless, you need to understand when you look at what lenders look at, which is basically your credit liabilities. That doesn't include self-reported debt. So sometimes people will try to boost their credit score and they'll report like let's say a cell phone bill, but it doesn't actually count towards your debt to income ratio when you're using when you're using it for purchase of property. But you should be looking at it yourself, right? They're not telling you, well, your car insurance affects your ability to purchase a property, not from a lending perspective, but you personally should be reviewing that. That's why it's so important to create a budget and go through it. How am I spending money? Because the reality is a lot of people think they don't qualify, and that's because they don't budget well. So if you can budget well, manage your expenses, you're able to both save money for closing costs because you still got to pay them, even if you're 100% permanent in total. That still exists, and you can't roll those costs into the loan, unfortunately, right? Only on a refinance can you do that. And I would also suggest that you guys do credit monitoring to be able to make sure that no life or not life events, because you're not doing it. It's like identity theft, people opening up accounts on your behalf. You just want to stay away from that. Now, let's go into understanding the budget and then what that pre-qualification process looks like to get into that homeownership piece. And so like what we've been talking, like we mentioned, right, that budget is got to be yours. If I talk to someone and say, hey, what are you comfortable with paying every month? If they say, this is my monthly payment I'm comfortable with, I feel confident. But if they're like, I'm not sure, I'm just trying to figure out what I can do, also happy to help with that, because there's just, again, a lot of moving pieces to this. So the pre-qualification process is important to understand, because when you make an offer on a property, you have to show a piece of paper saying like, yes, I've been going through some type of process in order to let you know that as a buyer, I am serious and a lender has verified my information. And it's a way to secure your dream home. Now, when you go through this process, you have to be prepared, because there are moving pieces and everyone's financial picture is going to be different. Documents that you typically are going to provide, it's like W-2s, pay stubs, bank statements, and any details around your debt that you have, okay? And again, if there's a divorce decree, pay child support, get child support, you're going to need to provide that documentation. If you have VA disability, then it's just a certificate of eligibility to confirm that. That might be a really easy situation to be in, but those are documents you need to get together. If it doesn't feel painful, then most likely you're not getting an accurate enough approval, and that's why we get a lot of phone calls. So thank you. Where clients may get denied a week before closing and be like, well, I didn't know that, or like, we didn't provide it up front, the documents, but the lender told us it'd be no big deal. It makes a difference because they look at residual income. That's why it's so important to understand what your financial picture is, right? Looking at your net income to be able to do that. And again, if you have things like you're exempt from paying property taxes at some point, well, guess what? That's something that happens down the line, and you need to factor it both in today and when it's going to be exempt. But that's something that you should do your research on. Stick to your budget. Price points of properties with, actually, you know what? Let me talk one more time about this budget piece, because this happened to us, and I see it happen to a lot of people. Conditions of homes kind of vary widely, right? And sometimes you may have a small difference in price in order to get a home that's fully renovated. You don't have to do any work. Everyone's situation is different. So when you're looking at homes, look at a range of properties, because also taxes are going to vary widely. And if you're going for the tax exemption as well, it might give you some more flexibility, because technically you can qualify, depending on the lender that you work with, without property taxes, providing your host financial position allows for it, all right? So you do have some initial flexibility to be able to get into homeownership sooner because of that. Look at the difference, because if you buy a home that needs fixer-upper, and let's say it needs $60,000 to bring it current, and another $60,000 worth of work, and you look at another property that may be $20,000 or $30,000 more to purchase, but it's ready to move in, that could be something that you consider as a cost and a financial piece, right? So we kind of take that piece off of, hey, I'm only going to do this, and this is absolute max. We get that. But then also makes a difference on your cash reserves, right? Do you want to put the work in yourself? Are you hiring people? And what the cost of that looks like, because that, again, it's going to vary widely, and you need to put yourself in a good position. Closing costs, right, on average are about 3% across the country. There's a lot of studies around this. If you work, depending on who you work with, that might be more because they charge higher fees, especially with VA loans. I'm always talking, be careful. If you're getting marketed to, you're paying for that marketing, simply just hands down. Now, you want to be able to save for closing costs. Now, that's either setting money aside from, like, let's say your paycheck into a separate account you don't touch, or you're leveraging, let's say, a TSP account where you're borrowing against your own funds in order to become a homeowner, or you can get a gift to be able to do that, or sellers can pay for your closing costs. We just don't really see that in a competitive market. Not only can they pay for all your closing costs, they can also pay for up to 4% in seller concessions to help reduce debt on your side in order to qualify. Unfortunately, we just really don't see that much. And I also highly suggest having an emergency fund that you guys can tap into in the event something were to happen during your home buying, after you've bought your property, because things are expensive. You could look at getting different types of insurance to help you with that. And also just buying tools is expensive. I know this because I'm going through this right now, or I guess not right now, it continuously from being a homeowner again, how much stuff that you need to buy and how much everything costs. Plus you have to buy furniture, and then you don't know, utility costs and all that. The last thing I'll leave you guys with is really working with somebody that knows what they're doing. I think this is from your real estate team, right? I know from my end, it makes a huge difference when you have a lender that responds to you, is available outside of business hours, right? Available on the weekends, because you have to be able to answer questions. You got to know the program inside out, especially the VA loan. This is both if you're working with a realtor or not, right? If you're working with a realtor, the realtor needs to really understand what the requirements are for a VA home loan, the true requirements, because again, a lot of people have misconceptions around the program that just continuously get downhill and keeps getting passed on, where I'm like, that's not how it works anymore. A lot of veterans are able to secure properties with their VA loans, just like with condos, and I have a whole separate video on that, right? I did one for Florida and just for outside of Florida, just because veterans can purchase any condo they want. The cost of using an alternative product is crazy expensive. And it gets thrown out all the time. I did a video on that as well. That's why it's better to use your VA loan the first time around. And if people want to push you away from that, guess what? Find someone else to work with. That's my personal opinion, because again, the program is significantly, or it's an amazing program that you should be able to utilize. You fought for your country, you served your country, you should be using it. So make sure you guys hit the like and subscribe button, and I'll catch you guys soon.